morning and welcome to Business Morning. I'm Chimeze Obi Iwago. Well, Nigeria has moved into the second phase of the gradual ease of the COVID-19 lockdown with the reduction of the nationwide curfew from 10 p.m. to 4 p.m. The Presidential Task Force on COVID-19 announced on Monday that persons who are on essential duty remain exempted from the curfew. Such persons include healthcare and media services providers, as well as those working in the nation's critical sectors. The PTF National Coordinator also announced the reopening of the nation's financial sectors, adding that they will be fully operational. The banks now allowed to operate normal working hours 5 days a week. The mass gathering of 20 people outside of a workplace or places of worship remains prohibited. There will be controlled access to markets and locations of economic activities, but local authorities will continue to provide guidance on opening times. On movement from one state to the other, all interstate travels by individuals remain prohibited except for essential travel and the movement of goods and services. All restrictions on the free movement of goods and services are now removed in this phase. Also, players in the aviation sector have been told to develop protocols for the resumption of domestic flights from the 21st of June. All right, a look at the global oil market. Prices rose this morning with traders waiting to see whether major producers agree to extend their huge output cuts to shore up prices at a virtual meeting expected later this week. Brent crude futures rose 0.91% to $38.67 a barrel. West Texas Intermediate crude futures rose 0.56% to $35.64 a barrel. Brent has doubled over the past 6 weeks thanks to supply cuts by the Organization of the Petroleum Exporting Countries and allies, including Russia, a group dubbed OPEC+. Now, both Brent and WTI prices, however, are still down about 40% for the year so far. OPEC+ producers are considering extending their output cut of 9.7 million barrels per day, 10% of global production, into July or August, at an online meeting likely to be held on June 4. Under the OPEC Plus plan agreed in April, the record supply cut was to be for May and June, scaling back to a cut of 7.7 million barrels per day from July through December. Saudi Arabia has been leading talks to push for extending the heftier cuts. An extension could push oil prices to $40, but there will have to be some kind of follow-through on that commitment to sustain higher prices. Trade tensions between China and the United States over Beijing's security clampdown in Hong Kong, as well as manufacturing data on Monday showing Asian and European factories struggling, has kept a lead on gains. And Seplat Petroleum Development Company, PLC, a leading Nigerian independent oil and gas company listed on both the Nigerian Stock Exchange and the London Stock Exchange, has paid a dividend of $59 million to its shareholders. At the company's 7th annual general meeting held in Lagos, Seplat board chairman Mr. ABC Ojiako said the company plans to position itself for an ambitious next phase of growth. Let's watch this.
This is not a poorly attended meeting, as the picture here may depict. It's the 7th annual general meeting of Seplat Petroleum Development Company, PLC, an indigenous oil and gas company listed on both Nigeria Stock Exchange and the London Stock Exchange.
2019 annual report and accounts.
COVID-19 prevention guidelines have necessitated the almost proxy meeting. Save for the new gathering arrangements, every other component of an AGM are intact when the meeting gets underway. As the notices read and carried, the company chairman speaks to the successful year-end 2019.
I would like to inform distinguished shareholders that Seplat has continued to work to make sure that we deliver on the promises we've given to our stakeholders.
Electronic systems we've all gone, and so the voting was electronically done and carried.
I take it that the report has been unanimously accepted and received by the shareholders.
Just so you know, the sheer number of people in attendance doesn't say anything negative about the strength and size of the company. Seplat announces $59 million dividend payout to shareholders.
In terms of production, our production has not reduced because of this exercise. So even during the pandemic, our field operations have continued unhindered, and therefore production has in fact increased. You will see by the end of the year that our production for 2020 will actually be higher than our 2019 production.
A bit about how they get things done successfully is a growth strategy which is underpinned by a clear financial strategy that aims to maintain a strong, well-funded balance sheet with sustainable operational cash flow.
As of today, we are producing about 30% of gas to power in Nigeria and still growing. We believe that as a Nigerian company, we have a commitment to play our role in making sure that this power infrastructure problem is solved.
Seplat says it will continue to maintain strict financial discipline over investment decisions, while also embedding high standards of corporate governance and transparency.
All right, let's talk agriculture. That sector, of course, grew by 2.20% in the first quarter of this year. That's from 2.31% in the fourth quarter of 2019 and 3.17% in the first quarter of 2019. The sector actually contributed 21.96% to overall GDP in real terms in the first quarter, slightly higher than the contribution in the fourth quarter. Well, COVID-19 is here. Just wondering how the players in that sector really fared or have been faring throughout this period, and how can Nigeria use agriculture to actually mitigate COVID-19 impact. I'm being joined by the Chief Executive Officer, farmcredit.ng, and of course, he's the Chairman, Agri Group of the Lagos Chamber of Commerce and Industry, Mr. African Farmer Mogaji. Good to see you, Mr. African Farmer.
Same here. Good
So
morning.
how has COVID-19 treated you and your farming business?
Okay, our business, COVID has treated us really good.
Ah, that's very interesting. I mean, having a positive response.
Yes, so we did some scenario planning.
Great.
We observed what was happening in Europe and China. And so we did some scenario planning and planned ahead. So by the time it hit Nigeria, before it hit the agri space, we were well prepared. We actually scaled our production.
When you talk about scenario planning,
yes.
Please, can you expatiate?
Yes, so we played out what's happening in the US, what's happening in Europe, what can happen here. So first of all was that if they have a shutdown, that means we can't move inputs. So what do we do? So we bought inputs. Okay, do we scale? So we scaled in some areas. We actually stepped down in some areas. And some particular seeds in the country, we are the only company that has it in the whole country. So everybody's looking for it. And by the time we're coming out with our produce, we have that comparative advantage. So many people focus more on working on their operations, in their operations as against on their operations.
All right. Now, we are having this gradual easing of lockdown. We've heard the announcement yesterday, so I'm sure there will be more movement. What would that mean for the sector?
Well, I don't think it will have so much impact in the positive. Why? Because the interstate is still locked down. And so most of the foods produced have to move state to state. However, there's a general saying, there's a general information around food being able to move. However, the law enforcement agencies are extorting the transporters. So take, for instance, in a place like Shaki in Oyo State, to move food, a bus load, 18-passenger bus load, before they were charging 60, 70. Now it's between 90 to 120,000. So it's not going to affect it. However, also, we have challenges with agri-inputs imported into the country. So farmers across the country have a challenge of fertilizers now. And so that would affect yield and also input into the livestock. The livestock sector, especially the poultry value chain, they were adversely hit by COVID. So many of them can't sell their farm produce. Their cost of production has increased, and the middlemen are cutting the price. So we need an holistic approach from government to look at how we can work around distribution.
All right, during the course of this lockdown, organizations such as the Food and Agriculture Organization and the World Food Organization have been making so much predictions and projections about food insecurity, not just in Africa, but here in Nigeria. Looking at some of these issues that you have reeled out here, do you see some kind of food crisis on the way? This is farming season anyway.
Yes, I really don't foresee a major food crisis except the influence of climate change. So right now, we've not had the rains come when it should come, and there's a potential challenge of having floods. So if that comes in, we would have a challenge. If we don't have a challenge of flood, then we would balance out, because what would normally go to waste would no longer be wasted and can be converted. And don't forget, we have quite a lot of Nigerians looking inward into the agri space now. We have a lot of multinationals that use a lot of grains and cassava into their production. Many of them are forced now to look into the supply chain within. And 2 years ago, when the price of dollar went up, many of them have changed policies to look inward. And now COVID has just created a level playing field for many to spring up. And I think Nigeria needs to embrace on that.
Now, talking about those supply chains, that's another area where a lot of agro-processors whatever, have issues characterized by logistical challenges in sourcing inputs and outputs.
Yes, it's a huge one, especially for the big companies. The small ones can adopt other measures, they can adapt, cut down, but the big companies would have a challenge, because the moment they have to shut down by 50% and lower, that means they have to lay off. That means they can't get to the market. And many of them also depend on importation. So yes, that's the negative side, but the positive side also is that if government comes in to support them, not financially, but support the sector through the Ministry of Agriculture to say, hey, this is the opportunity in terms of putting out the numbers, to say X billion, you have the opportunity to make X billions of naira, and people can move into that sector. Government needs to guide the private sector into the investment. If not, you will find many of the private sector rush into areas like rice now. You have quite a lot of people who rushing into rice. So eventually, a year from now or end of this year, you might have some glut because we don't have enough processing plants. So they need to say, oh, why don't you look into cassava? Why don't you look into tomatoes? Why don't you look into this value chain? These are incentives that needs to happen. And one of the things that happened over the weekend with the Lagos Chamber of Commerce and the 6 commissioners of agriculture, well, 5, Oyo State didn't show up, was to look at how can we begin to look at regional agriculture collaboration as against each state doing their thing. And, so all of them are planning to partner with Lagos, with the Lagos rice, produce for Lagos because Lagos doesn't have the land. So that regional collaboration needs to come in to be able to sustain these multinationals so that post-COVID, they don't go back to importing, but look at the backward integration.
Now, are you aware of the likely invasion of low cost in West Africa coming from East Africa, particularly Kenya? The Food and Agriculture Organization have been warning, against that. And those of them in the north, Sokoto, Kebbi, and all that, will be mostly affected. Are you aware of this?
Yes, I've been following the trend of the low cost invasion in Kenya, Uganda, and Co. And it gives me some concern because most of the states that it would affect in Nigeria are the grain-producing states. And grain is something we all consume. And so, and I'm not seeing a proactive ministry at state, at federal, at local, addressing that potential. Because it's still potential, we're not really paying attention to it. We need to put in we need to take care of it before it comes here. If not, because most of these farmers are uneducated, and so I see a little challenge if it shows up.
Yeah, so talking about uneducated farmers, it seems, artisans are what we have, in agriculture. I remember the former Minister of Agriculture, who is now at the African Development Bank, talk about making agriculture a business. Where are we in this?
I think there's still a lot of talk around it. We've not really created the platform to bring the youths in. The language the youth speak, we're not speaking that language. Most of the intervention is still addressed towards the rural people. And the scale at which they give 1 hectare, that's 2.5 acres, 15 plots of land, the graduates, that's not sustainable for the graduates. So most of the designs of these interventions and incentives is still for the rural people as against the youths who are educated and who can embrace the value chain massively.
Where can the education system actually come in here, talking about, bringing the youths into agriculture? Because right now we're seeing oil prices plummet. And of course, Nigeria, I think Nigeria has gone past looking at oil as the main source of revenue. They're looking at diversifying. And one area is agriculture. And you can't talk about agriculture without inculcating the youths into it. Where does the education system come in here?
Yes, the education, even if you check most of the institutions, they are not well equipped. So they have facilities and infrastructure that is not well managed. So we need to take, fortunately, I use the word fortunately, COVID has created this online platform. So we need to get people on the online platforms to teach them best practices. And beyond that, we focus too much on production as against value addition. So we need to look into that value addition, small cottage, nothing big, nothing medium.
What about research?
Yes, I can tell you we have more than enough research. We should just pick up some of the research that is gathering dust in all these universities. We have the best brains. We only need people who understand the system and can run with it. Really, we don't need anything new. It's either you say the glass is half empty or half full. Nigeria has the glass half full. We just need the right people, not policies again. We need people who can pick these policies and run with it. We don't need theory again, practical.
No more talk.
The youths are willing. COVID has leveled the playing. And somehow, I believe in the government's sincerity to try to improve agriculture, but we just need action.
All right, so looking at the whole thing, what's your outlook? What will the agriculture landscape be like post-COVID?
Post-COVID, I think Nigeria is likely to create an economic miracle if we have the right people. Because West Africa, Africa needs Nigeria now. The rest of the world, China is trying to come to Nigeria. US is trying to come to Nigeria. India, all of them are scrabbling for Nigeria. So I see us being able to work an economic miracle if we have people who are practical and action-oriented, implementing policies and strategies.
All right, let's just hope we tap into this great opportunity.
I hope so.
Thank you, Mr. African Farmer,
Thank
for being
you.
part of the show. Yeah, African Farmer Morgaji is the CEO farmcredit.ng. We'll take a break, and when we come back, we'll look at commodities market updates. Do stay with us. Thank you for staying tuned, and for updates on developments in the commodities market, I'm being joined by Damilola Akimbami, Head of Research at Financial Derivatives Company. Good morning, Dami. Thank you for joining us.
Good morning, Chimeze.
Well, I just finished a conversation here on agriculture sector and talking about food security. And looking at your burning economic issue, one of the issues there is that global production of grains to hit record highs of 2.18 billion tons in 2020. What would that mean for Nigeria and its food security?
Well, the commodities that we're referring to here, the global grains we're talking about, are predominantly wheat and corn. And these are commodities that Nigeria imports. And what actually is leading to these positive forecast is because, one, there's been a halt in global trade because of the coronavirus, and there's also weak consumption. Now, the major producers of these grains, the US, China, Russia, India. These are countries that have been worst hit. US has right now the highest number of infection cases. So definitely the impact of the coronavirus, the shutdown and economic contraction has affected these countries. So there's a lot of supply in the market and the demand is not there. And that is what we're projecting is going to push these supply levels to record high positions. And it's also going to affect prices because if you have a lot of supply, if the market is oversupplied, it's going to push down prices. And for Nigeria, because we import these commodities, it's favorable for our import bill, meaning we're going to be spending less to bring in these commodities.
Now that we have the lockdowns being eased and then perhaps those of them that get these commodities in here that use it, what will that mean for the products that are produced with these commodities in terms of pricing?
Well, the good thing is that it's not just Nigeria that is now relaxing its lockdown measures, where a lot of economies are reopening. So we know that China, even these countries that are the major producers of greens, are also reopening their economies. We are seeing a pickup in manufacturing, in trade. So what that means is that aggregate demand is going to pick up. And right now, the market is oversupplied. Whether you're looking at the oil market, you're looking at wheat, you're looking at corn, there's a lot of supply in the market. So you need a pickup in demand. And because these economies are reopening, we're going to see that. So that should rebalance the market to an extent. And if there's a pickup in demand, that should actually push up prices. So for Nigeria, we definitely want our import prices to reduce, especially the fact that there's also the exchange rate implication there because there's been an adjustment. So definitely what we're going to be, the price of bringing in goods into the country is higher. So we need the global prices of these commodities that we import to be lower so that at least it offsets the increase in the exchange rate adjustment. So for Nigeria, it's going to be depending on which export or import prices carry a larger weight, because our export price, for instance, oil prices are slowly inching up. We also want cocoa to start increasing. So if our export prices are increasing faster than our import prices are increasing, our terms of trade should be favorable.
Now, I did talk about the issue of invasion of locusts from the East Africa. Yeah, your researchers, are you concerned about this?
Yes, it's something to be concerned about, but Nigeria isn't, we don't necessarily or really have that issue of locust and drought, unlike other countries, especially in the eastern part of Africa, where they're experiencing drought, they're experiencing locust and whatnot.
Well, the FAO is saying that this is gradually coming into West Africa, and Ghana, Nigeria, and most of them have been mentioned.
Yes, so it's, like I said, it's something to be concerned about, because if there's locust, if there's drought, it actually eats into your output. And if output falls, that could push up prices. So if it's affecting the commodities that we import, again, back to our earlier discussion, if it affects that and output drops, it's going to push up prices. Also, even from the export side, if it affects our export, definitely because supply too was reduced, it could also push up our prices. So definitely nobody wants that kind of weather conditions to affect, especially the agricultural space. Everyone wants favorable weather conditions, because if you have that, you would record a bumper harvest, and if your output levels increase, that is favorable for your balance of trade.
All right. Now, we have seen that the economy is gradually opening up.
Yes.
And the government just announced another phase of easing of this lockdown. So how would that impact commodity prices? And of course, even transportation.
Yes, I was just going to talk about the fact that they're considering on at least reopening travel or allowing travel to recommence maybe from June 21st. Now, that is good news, because initially we know that the economy was in a shutdown or in lockdown mode. And the fact is that as you begin to produce more, as companies start to reopen, you need the transportation sector, which is a very key aspect of the economy, because you can produce as much as you want, but if you can't move it from the farmlands to the market to where the demand is, then you have a problem. So the fact that at least the government is thinking of reopening transport systems, especially the airport, is good, because also it would support trade. We've talked about our import and our export commodities. As more companies, as more countries also reopen and allow global trade, that is going to be favorable for the economy.
All right, another interesting one there is the reduction of fuel pump price,
Yes.
again, to within the band of 121 naira 50 kobo to 123 naira 50 kobo per litre. How would that impact domestic commodities, particularly prices, particularly food? And in fact, your inflation numbers.
Yes. Again, going back to how important or the relevance of the transport sector to commodities, to consumer prices. We've talked about moving the logistics aspect, the distribution cost. And now that fuel prices have reduced, transport, funny enough, the transport system actually accounts for a minute aspect of the consumer basket, about 6.6%. But we know that especially in urban cities like Lagos, there's a lot of traffic. People spend a lot on transport costs. So the thing is that if fuel prices are reducing, it frees up more income for consumers to spend on other essentials like food, on rent. So it's actually a good thing, but it's also ironical that the price of fuel is being reduced at a time when oil prices are increasing, because typically if your oil prices are increasing, you should be spending more because the cost of bringing the
Well,
fuel
maybe it
in
has not increased as much as they would want it to increase, but there is still a possibility,
There is a
particularly
possibility,
now
yes.
that OPEC is talking about,
Possible extension, yes,
of
of its
its
supply.
production cut. So do you now see the possibility of this price going up again, perhaps?
So the thing is, right now, the downstream industry is not fully deregulated, especially when it comes to price, because it's still determined by the government. So there is that possibility that as oil prices continue to increase, that the government may reverse and then increase prices. And the thing is, if you're in a fully deregulated market, the prices should be determined by market forces, supply and demand.
So for how long would we continue with this government having a hold on market prices, really? Because a lot of people have said this is not working.
Well, we see that the government is already taking, at least is moving in the right direction. We know a couple of weeks back, the government now allows other oil marketers to import fuel in. So it's not just the NNPC. So that is a step in the right direction, and it's just a pointer as to where the government is heading. So we know that definitely in the next couple, at least in the short to medium term, we start talking about subsidies. We know that subsidies to an extent have been reduced, not completely eliminated, but you need to remove subsidies. You need to hands off. The government needs to hands off from the downstream sector. Look at diesel now. Nobody really complains about diesel scarcity because it's fully deregulated. Market forces determine what goes on with its price. So while slowly moving to that section, to that part, to that point in Nigeria.
Okay, so with the gradual easing of this lockdown, what is the outlook for agri-commodities and, of course, oil?
Well, I think at least for agri-commodities and even for oil, it's favorable because, like I mentioned, a pickup in demand, and that should help support prices. We know that OPEC, with its allies, are planning on meeting most likely maybe June 4 to discuss a possible output cut extension. That, coupled with the fact that there's a pickup in demand, should push oil prices up. Also, the fact that now agri-commodity producers such as Ivory Coast, such as Ghana, that produce cocoa, and even the wheat and corn that we talked about, the grains producers, if they have the market to sell their goods to, if more global trade is encouraged, if international airports are opened, that is favorable for commodity prices.
All right, thank you very much, Damilola, for your time. Damilola Akimbami is the head of research at Financial Derivatives Company. Let's take a quick look again at the global oil market, and that's just before we go to Temple for the market review. Oil prices rose this morning with traders waiting to see whether major producers agree to extend their huge output cuts to shower up prices at a virtual meeting expected later this week. Brent crude futures rose 0.91% to $38.67 a barrel. West Texas Intermediate crude futures rose 0.56% to $35.64 a barrel. Brent has doubled over the past 6 weeks thanks to supply cuts by the Organization of the Petroleum Exporting Countries and Allies, including Russia, a group known as OPEC+. But Brent and WTI prices, however, are still down about 40% for the year so far. OPEC+ producers are considering extending their output cuts of 9.7 million barrels per day. About 10% of global production into July or August at an online meeting likely to be held on June 4. Under the OPEC Plus plan agreed in April, the record supply cut was to be for May and June, scaling back to a cut of 7.7 million barrels per day from July through December. Saudi Arabia has been leading talks to push for extending the heftier cuts. An extension could push oil prices to $40, but there will have to be a follow-through on that commitment to sustain higher prices. Trade tension between China and the United States over Beijing's security clampdown in Hong Kong, as well as manufacturing data on Monday showing Asian and European factories struggling, has kept a lead on gains. And Nigeria, of course, has moved into the second phase of the gradual easing of the COVID-19 lockdown with a reduction of the nationwide curfew from 10 p.m. to 4 a.m. The Presidential Task Force on COVID-19 announced on Monday that persons who are on essential duty remain exempted from the curfew. Such persons include healthcare and media services providers, as well as those working in the nation's critical sectors. The PTF National Coordinator also announced the reopening of the nation's financial sectors, adding that they will be fully operational, with banks now allowed to operate normal working hours 5 days a week. The mass gathering of 20 people outside of a workplace or places of worship remains prohibited. There will be controlled access to markets and locations of economic activities, but local authorities will continue to provide guidance on opening times. On movement from one state to the other, all interstate travels by individuals remain prohibited except for essential travel and the movement of goods and services. All restrictions on the free movement of goods and services are now removed in this phase. All players in the aviation sector have been told to develop protocols for the resumption of domestic flights from the 21st of June. And for Monday's market review, here is Temple. Temple, I'm sure the gradual easing of this lockdown is also going to bring a lot more optimism to the markets.
Absolutely, it's going to change the prices for goods going forward because, as we know, yesterday the market was up by some 0.19%, and that means that the market opened very beautifully in green for the month of June. So yesterday we added some cool numbers to what we have in the equity capitalization of the exchange. We came in settling at 13.19 trillion naira, positive by 0.19%, and that means a moderation in our year-to-date losses to 5.7%. As of yesterday, it had settled at 5.9% negative. Now it's at a negative of 5.7%. And of course, in terms of activity level, it was still very good, not as bad as one can imagine, even though we have some red right here. But in terms of volume, we're 253.30 million units yesterday. We know that FBN Holdings was the largest contributor. It had some 221 million naira or 222 million naira contributed to the value of the transactions. And of course, basically, the activity level was down by 21% yesterday in terms of volume. If you look at the value of transactions, it was down by 41%. Deals was just 4,775. If you recall, FBN Holdings has been the toast of the market again. That is because of some kind of rejigging that has been taking place in the structure of the company across the market. We know that they own 65% stake in FBN Insurance, but as at the time they released their 2019 annual statement for this year, we know that they indicated plans to sell off the 65% to the 35% holder, which is Salam Emerging Markets. And we understand from the press statement that was issued or notice given to the Nigerian Stock Exchange yesterday that they have been able to successfully conclude that deal. So the entire 65% stake that belonged to FBN Holdings now belongs to Salam Emerging Markets. And so possibly some changes will be happening around FBN General Insurance and, of course, FBN Insurance in the markets. It's something that we will continue to watch as it pans out in the market. Banking sector yesterday in terms of sectoral performance was very positive, up 1.28%, thanks to Access Bank, which was up by 2.2%. We got FBN Holdings was up by 1.87%. all the major banks that you have were actually quite positive yesterday in terms of performance, except for Stanbic IBTC, which was the second runner up in terms of losses in the market. And of course, we understand that was some sort of profit taking. Consumer goods side of the market up 1.13%. We got Champions Breweries contributing some 8% plus. Dangote Sugar, which is paying out on dividends, was also up by 9%. And of course, Nigerian Breweries was up by 1.5% yesterday. Industrial goods side of the market, we got some gains around WAPCO, which is holding its AGM tomorrow and has also sent out the link. So if it's something that you as an investor really want to attend at the stock via some virtual means tomorrow, watch out on the portal of the Nigerian Stock Exchange where you can get the link to that to hook up to that annual general meeting. Boa Cement was also up by some 0.71% yesterday. All of that you put together contributed to what we've been gaining. What we saw here up by some 54 basis points yesterday. Insurance side of the market, in spite of some gains of 10% on, or around 10% on Cornerstone Insurance, we saw some declines on Mansard. Mansard was down by around 8 to 9% yesterday and impacted the entire sector quite negatively. Oil and gas, it wasn't like there was no movement, but there was no change in the indices. And this brings us to the energy market. Ardova, Corn Oil, 11 PLC, MRS, O&O, no movement. But if you look at, of course, Seplat had its AGM a few sessions back, and of course there was no movement here. We heard the story earlier. They are paying out 38 naira in dividends to Nigerian shareholders and a whopping millions of dollars that's been put together in total for dividend payout. But look at Japol. They released their earnings yesterday. They then moved up by some 10% yesterday. And of course, it came in at 22%. It was at 20 kobo rather before now. But in total, yesterday we saw some 25.43 million units shares exchanged across this particular counter. Of course, we will be having Philip Anegbe, who is a research analyst with Cardinal Stone Securities, joining us on phone. Good morning, Philip.
Yeah, good morning. Thank you very much.
Yeah, so quickly, talk us through the sense of price correction and adjustments that we're seeing in the market lately.
Yeah, on the back of quite a bullish domestic participation in May, we've seen the market extend gains into June. And like you've noted, it's been largely supported by all of the sectors, apart from insurance that was pegged back by Mansard yesterday. We've seen dividend play across a few names and some tactical positioning. Dangote Sugar rallied strongly after declaring a 1.10 kobo dividend that more or less motivated or inspired investor reactions. Well, what we think is that going forward, a couple of variables will be important in terms of what shapes market focus going forward. Key among them is the coming OPEC plus meeting that is expected on the 4th of June. Word on the street was that it was possibly held on 9th of June, but they are looking to push it, bring it forward to the 4th of June. So key expectation will be a decision on what will happen to OPEC plus cuts, production cuts. Whether or not they'll be looking to extend that cut will have significant bearing on what happens to market activity. An extension will support markets of oil-producing countries. Then in addition to that, you want to keep watching the reopening of the economy and the impact on the domestic market. That is expected to have some positive impact on domestic markets as financial services look to open fully. They will continue to watch the CBN. They've been talking for quite a while about restarting forex sales to foreign participants. So if that happens, you expect to see more robust activities on the foreign participants' end. And that will be watched closely, given the news that some of them have been on the sidelines for quite a while because of FX restriction. But overall, we expect bargain hunting to continue because equities are still relatively cheap, and the yield on fixed income instrument, particularly the 1 year.
And that's in spite of the level of activity and liquidity that a lot of the local banks have pumped into the equity space. Philip Anegbe, thank you so very much for your insight shared with us via phone, of course, this morning. Philip Anegbe is a research analyst with Cardinal Stone Securities. Let's hope that it will become green for us throughout the month of June. Chimeze, what do you think?
Green, green, green. That's where I stand, Temple.
Thank you.
All right, we'll take a quick break, and when we come back, we'll cross over to London. Stay with us. updates from the streets of London. Here is Juliana Olainka. Good morning, Juliana. Well, shoppers couldn't wait to rush back to high streets and retail parks. Speak to us generally what yesterday was like for businesses on the street of London.
Good morning, Chimizé. Well, some shoppers were rushing back. Definitely, if you have a look at IKEA, the queues were going on for hours. Some 1,000 people were standing outside the Swedish furnish retailer yesterday, but not enough, I would say, for some businesses who will still struggle. A lot of people waiting for the 15th of June, which is D-Day for non-essential businesses. So we're going to start seeing retail stores, department stores, toy stores finally opening after what would be, by that time, about 3 months of closure. But I definitely think there is a sense amongst people, particularly in England, that lockdown is finally coming to an end. It's not over, but it is beginning to phase out. And that's exactly what Prime Minister Boris Johnson will want. The economy is pretty tanked at the moment, and they need people out spending. And hopefully that's what will be happening over the next couple of weeks.
And public consultation has found some kind of strong support for cutting stock market trading hours in the UK to help improve gender diversity and, of course, mental health across financial sector. Can you tell us about this? What has informed this?
Well, the London Stock Exchange started this consultation in December last year after they were hearing from external bodies that it just wasn't healthy. Here in the UK, and I think it's quite prominent along a lot of stock exchanges around the world, that it's a pretty stressful situation. A lot of these traders get emotionally involved, and we have had, actually, in the city, some quite high-profile suicides and serious mental deprivation happening to traders. Now, at the moment, the LSE is run between 8 a.m. and 4:30 p.m., which, believe it or not, is the longest trading hours in the world. So they just get the end of the Asia markets and they get the beginning of what's happening in America. So there has been calls for that to change, and the proposals now are that the stock exchange will run between 9 a.m. to 4 p.m. And that will coincide with what's happening across the rest of Europe. So yes, the consultation has come back, and the majority of people that they consulted with did agree that those hours are too long and they would like to see a change. You mentioned diversity and inclusion. That's very important alongside mental health, because for a lot of women, 8 a.m. is an early start. If you start at 8, you're likely to have to leave your house way before 7 a.m. So it's not seen as a particular friendly environment for mothers and even fathers who want to stay at home further with their children. So the LSE will take this consultation into note, and it has been seen as if there will likely be a change in those trading hours.
And what is this investigation on the subprime lender, Amigo?
Well, yeah, the city watchdog, the Financial Conduct Authority, have announced that they will be launching an investigation into Amigo's loans. It's kind of a payday lender. So if you're in a desperate need for quick money, you can apply to them and get thousands of pounds. Their shares have tumbled over the past year or so, because in London we've really cracked down on these payday lenders, because a lot of people have got themselves into serious debt, and because the APR is so high, it's taken people several years to get out of it. And now they have launched this investigation into Amigos because they are not happy with how they're checking their customers' credit worthiness. At the moment, if you want to apply for a loan to Amigos, the only way you need to guarantee that loan is if they ask for a guarantor from friends and family, and the FCA don't think that that's enough. So we're waiting to hear the outcome of that. On top of that, Amigos is trying to sell their company. They've had some interest from an acquisition purchaser, but the founder isn't happy with that. He's got the majority of the shares. And so we're waiting to see what happens with that. At the moment, the Amigos is worth about £100 million. So it's definitely made a lot of money over these years. But yes, so the FCA are putting them under investigation. And I'm sure we'll have an update on that over the next couple of weeks.
Absolutely. And of course, we hope to get more updates on other issues later today. Thank you, Juliana. And back here on the debt and currency market, we have Temple again. Temple.
Thank you, Chimeze. A lot of people actually track the NASD OTC, and I think it's necessary to give out the numbers now. Yesterday it was quite positive, 33 basis points higher. We still have the market capitalization at 509 billion naira. It hasn't dropped below 500. And of course, volume yesterday was just 1.5 million, and that's valued at 26.28 million naira. You have deals at 13 yesterday, only out of the 39 securities tradable there. And of course, Niger Delta Exploration Production Company has actually been making some gains. It opened at 277 naira and closed at 304 naira yesterday. Moving to the debt and currency side of the market, yesterday for the bond side of things, there was a compression of 29 basis points overall yesterday, because we saw lots of interest across the 2050 paper, which was up by 12.3%, and of course the 2049 paper, which is up at 12.25%. Of course, we got some interest as well around the 2023 paper, which is at the shorter end of the curve. If you look at the NCB end of things, the 182-day paper, which was introduced last week at the auction, continued to get a lot of interest, especially at the retail end of things. So we got some gains on that side yesterday. And for the open market operations side of the maturities, a lot of interest is being put across the 16th of February 2021 security. Perhaps debt and currency market analyst, who is Ramat Baba, chief dealer fixed income at FBN Quest Merchant Bank, will be able to give us some more insight. Good morning, Ramat.
Good morning.
So quickly, we saw some compression, 29 basis points or thereabouts, or at the bond end of the market yesterday. That's the secondary end of things. Are we likely to see that level of demand sustained today? It doesn't look like we have good audio from Ramat. Hopefully, we'll be able to join her back. But basically, in recent times, we've been seeing lots of interest across some of the new papers at the auction that played out last week, rather, in the markets. The 16th of February 2021 security is one key area that a lot of investors have been looking at. We also understand that the 11th of May maturity has also been enjoying some bid spread lately. But one thing we know is that we have a liquidity level of 525 billion naira or thereabouts in the system. And of course, it's something that lots of investors are hoping will shape the markets today, even though we know that, yes, the federal government has indicated plans to carry out aggressive borrowing plans for the rest of the year 2020. That's as a result of COVID-19, and that has led to a revision of the 2020 budget. So at the secondary end of the markets, every time we see a primary market auction, you see dealers, treasurers coming back to the secondary end of the markets to continue to buy up the lower valuations that we have in that space. We know that at the I&E windows yesterday, of course, a reflection of what we've been seeing lately was also what's transpired. The shorter supply, scarcity of dollars was only $22 million that was exchanged yesterday. That didn't change much in terms of the exchange rates. We remained around $387. Today, 2nd of June, federal government sovereign sukuk 150 billion naira 7-year program that was offered, I think, the 21st of May comes to an end. So if you haven't subscribed, you have 11. This is the 11th hour for you. Chimaze.
All right, we look forward to that, and I'm sure you're smiling and you're looking forward to actually taking advantage of this opportunity, Temple.
A debt management office, actually.
I know, right? All right, it's on that note that we draw the curtain on today's edition of the program. Thank you for watching. I'm Chimezie Obi Iwawu.